Hey guys, it is Patrick and welcome to section 12. This is the last section in our Principles of Accounting course. So hopefully by this point you understand all of the basics and you really have a great understanding of accounting from this perspective. So in this section, we are talking about statement of cash flows, which is one of the final financial statements that we really haven't spent a lot of time on. So we're going to show you what that looks like and show you how we would prepare the statement of cash flows. Now, specifically in this lesson, we're going to be looking at some of the basic classifications for the statement of cash flows. And so we kind of need to know the categories that we organize cash transactions in the statement of cash flows. And so that's what we're going to introduce to you in this lesson. And then in future lessons, we're also going to walk you through some more basics of the statement of cash flows before we get into the actual preparing of the statement of cash flows. So for the next couple of lessons, it's all going to be theory, but this is important theory so that you know what you're doing at the very end when you're starting to put together the statement of cash flows. So let's get started by talking a little bit about the statement of cash flows and the categories associated with it. So the statement of cash flows, what is it? So the statement of cash flows is a statement that reflects the cash inflows and outflows of an organization during the year. And at the very end, it also gives us the reconciliation of the cash balance sheet, the cash balance on the balance sheet. So at the end of the day, what we're trying to do is we're trying to reconcile the cash balance on the balance sheet. And this statement of cash flow does that for us at the very end. So it provides investors an understanding of what the company has used cash on, as well as a reconciliation as a check to the cash balance that's on the balance sheet. So that's what the statement of cash flow does. Now, what is included in the statement of cash flow? So when you really think about it, you might think that just cash is included in the statement of cash flows. And while that's mostly true, you should also know that the statement of cash flows considers cash as any cash and cash equivalent. So it's not just cash, it also includes cash equivalent. So examples of what cash and cash equivalents are. So obviously cash, anything a bank would accept as a deposit, and short-term highly liquid investments. Short-term highly liquid investments would be those investments that were purchased with an original maturity date of 3 months or less. So we're looking for short-term investments that have an original maturity date of 3 months or less. Keyword being original. So if we get into the time frame where it's 3 months due, that doesn't count unless it was bought specifically that had an original due date of 3 months or less. And all of that is included in the number cash on the reconciliation. So when you look at the statement of cash flows and you see beginning balance cash, that includes cash and cash equivalents. Why? Well, if you really think about our balance sheet includes cash as a line item in the assets, cash and cash equivalent. We talked about that in the balance sheet section of this course. So in order to tie that number to the statement of cash flows, we have to make sure they both equal each other. So that's why we include cash equivalents in our statement of cash flows. Now, classification of class. So at the end of the day, what we're going to be doing is we're going to look at all the transactions that a company makes, and we're going to look at those transactions specifically that have to deal with cash. Now, once we figure out what those transactions are, then we need to categorize those transactions into one of three categories. So at the end of the day, all cash inflows and outflows must be categorized into one of three categories in the statement of cash flows. So the first category here is the operating activity. The second category we have is the investing activity. And the last section that we have is the financing activity. So once we have the cash transactions, we then put them in one of these three buckets and we say, okay, is this related to operating, investing, or financing? And that's kind of where we put them in at the end of the day on the statement of cash flows. So let's look at each one a little bit deeper. So operating activities represents the cash inflows and outflows related directly to the revenue and expenses reported on the income statement. So when we look at the income statement, the revenues and the expenses that are on that income statement generally are cash transactions associated with operating activities. Now, the question that I like to ask when it comes to operating activity is, what does the business do on a daily basis to generate revenue? So if that's what they do on a daily basis to generate revenue, that would be in the cash inflows and outflows associated with the operating activities. So that would be operating activity items. Now, examples may include cash received for making sales, receiving dividends and interest, cash paid for services or cost of goods sold, and then cash paid for interest, cash paid for salaries and wages. So all of that would be included in the operating activities. Now pay special attention to dividends. So the keyword receiving dividends and interest, and then paid interest. If you notice, paying dividends is not included in this section. And that's usually a little bit of a confusion part for students when they're looking at the investing and financing section. So cash received for dividends and interest are included in the operating. And then interest paid is also included in this, but dividends paid to shareholders are not included in the operating section. So I wanted to be very clear about this section. All right, so moving on into the investing activities. So when we talk about investing activities, these represents cash inflows and outflows related to purchases and disposals of long-lived assets, as well as any other investments. Now, the key word here is other investments. This doesn't include short-term investments, because short-term, highly liquid investments would be cash and cash equivalent. So really, it's really any investments other than those highly liquid short-term investments, which would otherwise be in the baked into the number that cash and cash equivalent is on the statement of cash flows. So any long-lived assets purchased and disposals would go here in the investing activities. So some examples may include cash used to purchase or dispose of equipment, cash paid used to purchase investments and securities, cash received from the sale of equipment or the sale of investments. So very pretty easy to understand. We're just looking at investments that we would make in equipment as well as in securities. A lot of people think about investing activities and they wonder, why are we using the purchase of equipment as an investing activity rather than an operating activity, since it's usually used in the operations? Well, because it has a long-lived asset component. It's supposed to last us for longer than 1 year, so it becomes an investment to us rather than something that we use on a daily basis. So that's why we put it into the investing activities section. All right, moving on to the last one here. Last section is the financing activities. This represents the cash inflows and outflows related to exchanges with shareholders and lenders. Some examples includes cash paid, cash used to repay lenders, cash used to repurchase stock from shareholders, cash used to pay dividends, so there's our dividends to owners, cash received from borrowing funds, and cash received from issuing shares to shareholders. So this right here is issuing stock. This is taking out a loan. Now, it's important to know that we will use the word used and received and all of those technical terms. So if you're kind of seeing these words that come up a little more often, that's because we are going to use it on the statement of cash flow. So that's the financing activity. So really it has to do with any debts that we have or any transactions with shareholders that we have. Those two items would go into the financing activity. So one thing to think about here is that the debts, that makes sense, financing debts, but most people don't necessarily think about shareholder transaction as a form of financing. But indeed it is. It is a form of financing because we're trying to finance the business. And how are we doing that? Well, we're doing that with either debt and or shareholders' contribution. So we can take the shareholders' contribution to use that to fund our business. So again, thinking the financing more than just loans that you would take out from the bank. Now, some general rules. So this part right here is what I like to call general rules. It doesn't mean that they're always applicable, but for the most part, they are applicable when we talk about preparing the statement of cash flow. So that we can use this cheat sheet to help us understand whether a transaction affects the operating, investing, or financing section by looking at how the transaction affects the balance sheet. So again, this is a general rule, but this can be broken. But as you're starting to just learn it, this is probably the best kind of cheat sheet that you can use to prepare in the statement of cash flows. So the first one here for operating activities, if the transaction has to do with a current asset or current liabilities, we are going to put that usually in the operating section of the statement of cash flows. When it comes to the investing activities, if it has to do with a non-current asset, so we have assets, current and non-current. Current would go to operating, non-current would go into investing activities. Okay. And then the last thing here was financing activities. So transactions that have to deal with cash that are associated with non-current liabilities and stockholders' equity would go into financing. So same deal with the assets. We have current assets, non-current assets, current liabilities, non-current liabilities. Current liabilities would go to operating, non-current would go to financing, and then stockholders' equity, we don't have a current, non-current, so all of that would technically go to financing activities. And again, this is a cheat sheet, but it's also not. This is a general rule. It can be broken, so it's important to know that. But for the most part, you can kind of follow this as you're starting to learn and understand the statement of cash flows. So that is a look at the different classification of statement of cash flows. The key thing that you want to get out of here is understanding that any transaction that has to do with cash gets classified on the statement of cash flows into one of three sections: the operating, investing, and financing. And it's pretty easy to understand where they go if you understand the definitions of each section. So hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or click in the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.